Hey everyone, welcome into another segment of Selling Your Business Well. We're going to talk this segment on the idea of how you need to pay attention to each phase of selling your company. There's three key phases. Nick is joining me here as well. Nick Geraci, he's our private tax director. Nick, there's three phases, like 5-course, 3-course dinner. We're talking about three phases. Let's talk, what are they?
So across all industries, there are three specific time frames that you need to focus on when selling your company. There is the pre-sale phase, the during the sale phase, and the post-sale phase, each of which are equally important. The pre-sale phase, this is when you're lining up your financial statements. You're putting together the things that make you attractive to a buyer. So,
and by the way, Nick, when you say pre-sale, are you talking about like 6 months, a year, 2 years before you're trying to sell? I mean, because like when you go on a date, a woman is preparing herself pre-date, right? She's getting herself, she wants to be attractive. So when she gets there, hopefully there's a second date, right? So same way with this, pre-sale of the company, how far in advance are we getting the company attractive?
I mean, at minimum, you want to start doing this work a year to 2 years in advance.
Okay, wow.
Because it takes time to normalize.
So this is not a couple months in your opinion. This is a year to 2 years.
This is a year to 2 years because it takes time to normalize income. It takes time to, one thing from a CPA's lens, when I'm looking at companies or business owners, clients who come in and they just want to file their tax returns, they're looking at their financials from a lens of how do I pay the least amount of tax?
Right.
That's just anyone who owns a business. That's what they're trying to do. From the perspective of trying to sell your company, that actually hurts you.
Yeah.
So you need to make sure that we're eliminating, running personal expenses through the business. That's something that you see all the time, and that should be adjusted for anyways. But sometimes there's gray areas, and we want to eliminate that when we're preparing up to the sale, because they're going to look at financials not just for the current year, but in prior years as well.
So taking a fine-tooth comb and going back and saying, okay, let's really make sure this is right. And by the way, as you're watching this out there, you know already whether or not your books are clean or not. Mm-hmm. And if their books are not clean, maybe we need to start a little earlier because we got to clean the shop. It's like if you're going into your bedroom, it's really dirty. You got to take a little bit more time, So pre-sale, all right, what's next?
Well, before we move on to the what's next, look at your company from the lens of as if you were a buyer. If you were to look at your financials, what are the big red flags, the things that stand out to you or the professionals in your life who know how to read those financials? That's what we're trying to account for and trying to correct for before we get into a situation where there's actually any offers on the table.
I think that, you bring something up that's important, Nick, because a lot of times business owners will have professionals in their life that have assisted them and say, my CPA or this person or that person helped me kind of with the numbers, and I think I'm ready to go to the next stage. The question is, are they the best person in that space to really help them maximize their value? We're going to talk, by the way, we're going to talk on another segment here that you'll see later about some case studies of some folks that we were able to help significantly outperform as far as in their sale price because they were getting not great advice. We'll call it that way. So getting the right advice, ensuring your numbers are correct and things are right, things are cleaned up, so important in the beginning. Now we move to the next phase.
Yeah, next phase. This is during the sale. So during the sale, what really kicks this off is you get that letter of intent, right? This is when business owners really start to get excited because they see an offer on the table. And all too often the logical reasoning centers in their brain only start focusing on what that number is. What is the offer? And, what is that check going to look like?
Yeah.
And they don't focus on the details. Private equity, some buyers can, it's a dog-eat-dog world out there. You got to make sure that LOI is prepared in a way that best suits you, best suits your after-tax goals. And there's no poison pills. There's no things in there that ultimately can hurt you in the long run.
Well, I gotta say, this is something, Nick, that is so important because I think this idea of like bigger is better, that starts from when we're young. Do you want 2 or 3 scoops of ice cream?
Yeah.
I want 4, right? So that's just something that's kind of inherent in our nature. Right. And so having someone in your life to guide you to say, time out, just because the number is going to be bigger at the sale, even though we want it to be bigger, we also want to ensure that the way the numbers flow through, what you get to keep at the end, it's not about what you make, it's about what you keep.
Absolutely.
After taxes, really are maximized along the way. So that's super important. All right, what's number 3?
Number 3 is post-sale planning. Now, you want to be mindful of post-sale through each of these steps, right? Because post-sale arguably is where you're going to be able to do the most on the tax planning front. Obviously, you want to structure the deal correctly, but there are a lot of different alternatives after that sale to consider to make sure your after-tax revenue or your after-tax proceeds are maximized, right? Not just from a number standpoint on the after the sale step. You also are looking at from a psychological standpoint. You're transitioning from a season of being a person who is the day-to-day operator of a successful company to more of an investor. So being mindful of how that affects you is absolutely paramount, because it can be a big change and a big shock for a lot of people.
Yeah, I think that's important. And I don't think that's something that people think about enough, because they've given their lives. And as you're watching this, you're a business owner and you've been very successful. You've literally given your life years and years and years to develop, grow, and build a wonderful company. And this idea of exiting kind of feels scary, because you're in a place where, like, what do I do now? What am I going to do with my life? This is kind of my purpose, and in a lot of ways in life. And so that is so important, Nick, that really people are in a place where they think about the idea of, all right, what am I going to do when I step out of this business? How do I transition well? And how do I be in a place where I really find kind of purpose in the next season of my life? And that's not even necessarily something that's monetarily based. It's just the idea of, how can I use the talents, gifts, and abilities that God's blessed me with to kind of move on and add value to other people in life, right?
Absolutely.
That's
Absolutely.
so important. So the 3 phases of selling your business, very important. As you have questions about these, and you should, or you're worried about maybe the fact that you're not prepared well, or maybe you don't have a great team, or maybe you do have a team that's helping you, but you want to get a second opinion from a team that's done a great job. I mentioned to you, we got several companies that power this Invest Well show that have done a wonderful job of helping families in America do just this: sell companies well. Stay tuned. We'll talk to you next one.